Pension income. When you retire, you will get the pension income. But for obviously, there must be a pension plan in which all of your life you will contribute, and at the end, when you retire, you will get that money, right? So, firstly, I will tell
Yes.
you what is the pension plan. So, you can see uh, there are two types of pension plans. First line, two types of pension plans. Number one, state funded pension plan, and number two, self funded pension plan. State funded, state mean government. So, state funded mean this pension plan is maintained by the government. Government will give you that pension. And tell me, that when government will give you pension, is that much enough that you will spend a luxury life?
Yeah.
No, no. When government will give you pension, it's not that much. You will only fulfill your basic needs. It's not that much that you can spend a luxury life. No. Okay.
Yeah.
So when government will give you pension, you will only fulfill your basic needs, not much luxury life. So I am reading the first state funded pension plan. Individual make contribution in it in the form of national insurance contribution. But it's not that much. Only you will fulfill your basic needs. But if you want to collect more money at the retirement age, then you can go for you can make your own pension plans. Mean self fund, you can go for self funded pension plans. Second type. So if you want to collect more money, then you will go to the second type, self funded pension plan. So I am reading it now. Self funded is maintained by individual on his own discretion. Mean it's your choice. You if you want to make more money. And when you go to self funded pension plan, you are not on the you are not a burden on government anymore. You are not going for state funded. You are making your own self funded pension plan. So you are not going to be a burden on the government. It means you are benefiting to government because you are not the burden on government. Okay. So obviously, when you benefit to and when you go to self funded, government will also give you tax benefits, right? So government will
Yes.
also give you benefits in the form of tax benefits. So in self funded, you can see, so tax benefits are given. And in self funded, also there are further two types of self funded pension plan. Number one, occupational pension plan, and number two, personal pension plan. So, firstly, I will discuss occupational pension plan, OPP in short. Occupation mean job, right? So, for example, you are doing a
Yes.
job. Your employer will maintain this occupational pension plan for you. So, occupational pension plan is maintained by your employer. Now, further 2 points here. Number one dot. If employer makes contribution in your pension plan, mean if your employer makes contribution in occupational pension plan, then for employee, mean for you, it is an exempt benefit. Mean for example, 5,000 employer is contributing in your occupational pension plan. This 5,000 is exempt benefit for you. Exempt mean you will never pay tax on it. And for employer, it will be allowed expense from trading income. Obviously, employer is contributing 5,000 and it's expense for employer, and it's allowed expense for employer from his trading income. Obviously, employer is running his own trade. So he will earn trading income. So he will deduct this expense from his trading income. So trading income will be reduced. Then obviously his tax and NIC will also be reduced. So it's a benefit for employer also. And for employee, what is benefit? Exempt benefit. You will never pay any tax. Done. And for employer,
Yes, ma'am.
employer will reduce his trading income by 5,000. For example, his trading income is 40,000. So he will deduct 5,000 from 40. So now trading income is 35. So he will pay tax on 35 instead of 40,000. Done.
Yes, ma'am.
That's it. And the second point, if employee makes contribution in OPP, mean you when contribute in your occupational pension plan, then it will be allowed expense from your employment income. Mean employee will earn when you are employee. You will earn salary, bonus, benefits from company. That is your employment income. So you will deduct it from your employment income, from your salary, right?
Yes,
So for
ma'am.
example, you are contributing 10,000 in OPP. This 10,000 you can deduct from your salary, employment income. So it's also a benefit because employment income will be reduced, tax will be reduced for employee. Done.
Yes, ma'am.
That's it. That is occupational. So there are two things in occupational pension plan, OPP plan. One, if employer contribute, then for you it is exempt benefit. You will never pay any tax. And for employer, he can deduct from trading income as an allowed expense. And second thing, if you mean employee contribute in OPP, then you will deduct it from your salary, from your employment income. Remember these two things, right?
Yes, ma'am.
Next, personal pension plan PPC is maintained by private bodies just like insurance companies, banks, insurance, life insurance policy. You will make contribution for a certain time period and then you will get money after a certain time period. Or maybe in banks you will fix your amount and then you will get after certain time period your money plus interest, right? So
Yes,
personal
ma'am.
pension plan mean through private bodies you will maintain. And in this pension plan there are also 2 points. Number one, if individual makes this contribution, then you will get, you individual if make personal pension contribution, then three benefits you will get. And tell me whether we have done with the personal allowance topic or not.
We have.
We have done with the whole topic personal allowance. Mean
Yeah.
when personal allowance will be reduced, and when you get the annual allowance.
No,
Hmm?
no, no, no. No.
Yes, that topic is skipped. So I will tell you later on personal allowance topic. And these 3 points we will also discuss in personal allowance topic. So first thing, if individual makes contribution in personal pension plan, then the three benefits you will get. Number one, 20% contributed by HMRC. Mean, for example, you are contributing in personal pension plan, PPC contribution. In personal pension contribution, 10,000 you are making. And this 10,000 contribution is gross amount. And if gross amount figure is not given, you will gross it by 100 over multiply it 100 by 80 and then make it gross. Okay. But I am telling you it's
Yes,
a
ma'am.
gross figure already. So 20% contributed by HMRC means, for example, you are saying 8,000 I am contributing in personal pension plan. HMRC will say that no, you are contributing 10,000 in your pension plan. So it means in this gross 10,000 amount, 80% is contributed by you and 20% contributed by HMRC on your behalf. So when you contribute 8,000, you will get 10,000 money at the end. So who will bear 2,000? HMRC will bear for you. Okay.
Yes, ma'am.
That is a benefit. Next, second benefit. Your basic and higher rate bands will be increased by the gross amount. Mean for this 10,000 gross amount of personal pension contribution, you will increase your basic band. Right now, what is your basic band? 37,500.
Mm.
And higher band up to 1,50,000. So both bands you have to increase by 10,000. So now your basic band is 47,500 and higher band is up to 1,50,000. So tell me, by increasing the bands, is it a benefit for you?
Yes, ma'am.
Yes, because previously you were paying up to 37,500 20% tax and then above 40% tax. But now you are paying up to 47,500 20% tax and then on above figure 40% tax. Third, your third benefit, your adjusted net income will be reduced. ANI, adjusted net income, we will discuss in the personal allowance topic. If you go back and see the personal allowance, I will discuss right now with you this personal allowance. Normal standard personal allowance 12,500 every individual will get. But this personal allowance can be reduced. There is a restriction. In restriction, there are 3 points. Number one, if adjusted net income in ANI is 100,000 or less, if you are earning ANI up to 1 lakh, then full 12,500 personal allowance you will get, no issue. But number two, if your ANI is more than 1 lakh and but less than 1 lakh 25,000, then you will have to follow the 3 steps and then you will get the personal allowance. Before going to discuss the 3 steps, please write down an example on your notes. I am giving you example. For example, your ANI is 1,15,000. Now I am reading the steps and you will give me the answer, okay? Step 1.
Yes, ma'am.
Calculate excess above 1 lakh. In your example, what is excess above 1 lakh?
15,000.
So write down on your in front of step number 1 in your notes. 15,000 answer in step 1. Second step, calculate half of that excess. Tell me the half of this excess figure.
7,500.
Please write down on your notes. Open your notes if you have hard copy. Have you printed out the page?
Yeah. Yes.
Very good.
Ma'am.
Okay. And now third step, subtract that half from 12,500. Mean from original personal allowance. 12,500 deduct this 7,500 half amount. So what is the answer?
5,000.
Now only 5,000 personal allowance you will get, not 12,500 full, only 5,000 available. It means if your ANI is increasing, then your personal allowance is decreasing, right?
Yes, ma'am.
And now third point, no personal allowance available means zero personal allowance available if ANI is 125,000 or more. Mean once your ANI is 125,000 or more, always personal allowance will be nil. How I can prove it? For example, if your ANI is 125,000, step number 1 is calculate excess above 1 lakh. So deduct 1 lakh and tell me the excess. 25.
25,000.
Step 2, make the half of this excess amount divided by 2. What is half?
12,500.
And step 3, from original 12,500 deduct this half amount and your personal allowance will be 0. Clear?
Yes, ma'am.
And for example, if your ANI is 1,30,000, so calculate excess above 1 lakh. Excess is 30 and divided it by 2. So half amount 15,000. And third step, from 12,500 deduct this 15,000. So answer is negative, and you know personal allowance can never be negative. It will be 0. Clear?
Yes, ma'am.
So now it's proved. If your ANI is 125 or more, always personal allowance will be 0. Done?
Yes, ma'am.
Okay. Now go to the notes. Now, what is ANI? ANI formula is given in the box. The formula of ANI is net income. What is net income? Before uh, before personal allowance or after personal allowance?
Before personal allowance.
No. Yes, very good. So net income mean before personal allowance. So non-saving, saving and dividend. 3 columns total net income you will take here. Non-saving, saving, dividend, 3 columns total. Less gross personal pension contribution. Mean if gross figure is not given, then you have to gross it by 100 over 80. And less gifted donation. Gifted donation mean when you donate to charity. It's called gifted donation. Again, gross figure you will take. If gross not given in the question, you have to gross it by 100 over 80. And then you will get the ANI. And then you can decide how much personal allowance you will get by seeking this ANI. Hello.
Hello.
Okay. So from net income, when you deduct personal pension contribution and gifted donation gross figures, then you will get the ANI. And tell me, if in the question personal pension contribution and gifted donation if not given, then can I say my net income is called my adjusted net income?
Yes,
Yes,
ma'am.
net income will be ANI, and then you will decide about the personal allowance. And you know, when you make the personal pension contribution and gift a donation, I mean when you donate to charity and when you contribute in your personal pension plan, government will give you tax benefits to encourage you. Why government will give you tax benefits by doing so? To encourage you to make more personal pension contributions and make more gifted donations. You will get the benefits, 3 benefits by making personal pension contribution and gifted donation. You will get the 3 tax reliefs, 3 benefits. And you know, 3 benefits of these 2 are same. Personal pension contribution and gifted donations, 3 benefits are same. Same, three benefits, 3 reliefs you can see. Number 1, 20% contributed by HMRC. I already told you about it. Second benefit, when you make personal pension contribution and when you make gifted donation, your basic and higher both bands are increased by the gross amount. And now third benefit, your ANI is reduced by the gross amounts. Can you see the ANI formula? You know,
Yes,
from
ma'am.
ANI, you are deducting the personal pension contribution and gifted donation. You know, when you are deducting it and then you will get the ANI. it means they are reducing your ANI, right?
Yes, ma'am.
And if ANI is reduced, then personal allowance will be increased.
Please.
Yes, so in the ANI formula, both personal pension contribution and gift donation are deducted. So it's a relief for you. Clear?
Yes, ma'am.
And in the personal allowance, there is another topic, transferable personal allowance or marriage allowance. It's also called marriage allowance. So spouse, mean husband, wife can transfer personal allowance to each other, but up to 1250 pound. And it's a relief. Husband and wife are giving their personal allowance to each other up to 1250 pound, and it's a relief. And when tax department will give you any relief, then tax department will impose condition. So condition is not mentioned in your notes. Please write down the condition, heading condition. What is the condition before transferring the personal allowance to each other? The condition is, please write down, both
Yes,
spouse
ma'am.
must be basic rate taxpayer. Then they can transfer their personal allowance to each other. Both spouse must be basic rate taxpayer. Clear?
Yes, ma'am.
Okay, so second point, receiving spouse can use personal allowance. Receiving mean who is receiving personal allowance of 1250 can use this personal allowance as a tax reducer. In bracket, you can see 1250 pound he or she is receiving into 20% mean basic rate band apply. Basic band rate, you have to apply 20%. And then 250 answer, you can deduct it from your income tax liability. Tax reducer mean your income tax liability will be reduced by 250 pound. Okay. So for
Yes, ma'am.
example, please write down an example. Mr. A and Mrs. A has income 9,500 and 25,000 respectively. Your requirement, and Mr. A, Mr. A income is 9,500, mean below 12,500. In this case, his personal allowance is wasted. So instead of wasting, why not he just transfer to Mrs. A, whose income is more than personal allowance, right?
Mm-hmm.
So Mr. A wants to give his personal allowance to Mrs. A. Your requirement is calculate tax liability of both spouses. Now, firstly, we will calculate Mr. A income tax liability. What is non-saving income in the question of Mr. A? Income 9,500
9,500.
less personal allowance. 12,500 total personal allowance minus 1250 he is giving to his wife. So what is remaining he can get?
11,500.
11,250. And taxable income will be 0 because all income covered in the personal allowance. So income tax liability will be 0. No tax liability. Liability 0. Clear?
Yes,
Now Mrs. A income tax liability.
0. Yes, ma'am.
What is non-saving income of Mrs. A?
25,000.
25 less her personal allowance 12,500. Yes, she can reduce. What is her taxable income now? 12,500. Same. Now on 12,500 income, apply the basic band rate. What is income tax liability of her?
2,500.
From this income tax liability, she will reduce the marriage allowance as a tax reducer. How much? 1250 she is receiving from husband into 20% basic rate band. So is equal to 250. Deduct,
250.
and what is the income tax, remaining income tax liability?
2,250.
Done.
Yes, ma'am.
That's it. That is personal allowance done, complete. Now we are going to our, and this qualifying interest I will discuss later on. The small topic. So now go to pension topic. So we are discussing personal pension contribution, personal pension plan. And if individual mean you contribute in the personal pension plan, 3 tax reliefs you will get. Same, I already told you, 20% contributed by HMRC. Your basic hire, both bands you can increase by gross amount, and your ANI is reduced by the gross amount of personal pension contribution, and gifted donation also, right?
Yes, ma'am.
Now, second point is, if your employer make contribution in personal pension plan, then for employee, it is exempt benefit. Mean for you, it is exempt benefit. And for employer, it is allowed expense from his trading income. I think this employer, both points are same, which already we discussed in OPP plan. Right? These both points,
Yes, ma'am.
employer are same, which we discussed in OPP employer points. It means if employer contribute in OPP or PPC, both contributions, in both cases for employee, it is exempt benefit. And for employer, it is allowed expense from his trading income. Now, please see your WhatsApp list. I send you pension questions. Just hold on 1 minute. Okay, so okay, pension question. I am reading first question in WhatsApp list. Mr. A has a salary of 56,000. He made a contribution in occupational pension plan of 4,000. So Mr. A is contributing in OPP plan 4,000. So tell me what to do for about 4,000. What to do? What is the implication? Hello. Hello.
Hello, I can hear you.
Okay, so if Mr. is contributing in occupational pension plan 4,000, what is the tax implication of 4,000? What to do? Hi, Caroline. Please tell me.
I think we we deduct from his employment income.
Mr. A contribute in OPP. You are Caroline is Mr. A, right? And you are contributing
Yes.
4,000 in your occupational pension plan. So now what you will do of this 4,000?
It's deductible from the employment income.
Very good. For example, your employment income, your salary which your employer is giving you 50,000. In this question, your salary is 56,000. So what to do with 4,000?
We deduct it from the 56,000.
Very good. So 4,000 you can deduct from 56 from your salary. Now next, and his employer, you can see his employer, it's written right here, also contributed 6,000 in his pension plan. If your employer contribute in OPP, then what is the tax implication for Mr. A? I mean for you.
It's an exempt benefit.
Very good. Exempt benefit means you will never pay any tax on it. And your requirement is very important. Understand the requirement. Compute tax payable. So, calculate the tax payable. So now please write down tax payable. We have to calculate Mr. X. So firstly, tell me what is we have to calculate working one employment income firstly. Mr. is employment income. So what is employment income means salary in the question. 56,000 less employee contribution in OPP 4,000 and employer contribution in pension. Which pension? Both OPP or PPC, both, any. If your employer contribute in occupational pension or personal pension, in both cases, it is exempt benefit for employee. So for Mr. A, it is exempt benefit. He will never pay any tax. So what is the employment income now?
52,000.
52,000. And you know, employment income will go to non-saving column. So make the non-saving column employment income 52,000 less personal allowance 12,500. And what is taxable income? And please write down the answers which I am writing here. These are very important. Please write down everything, okay?
Yes, ma'am. 36,500.
36,500.
500.
And you know, up to basic.
39,500.
And what is your
39,500.
what 30?
9.
39,500. And what is your basic band? Your basic band is up to
37,500.
your basic band is 32,500.
37,500.
37. Up to 37,500 rate is 20% is equal to 7,500. And remaining 2,000 is going to higher band at the rate of 40% is equal to
800.
and what is your income tax liability?
8,300.
Done? Easy?
Yes, ma'am.
Okay, so now go to the second question. Open your WhatsApp list. Mr. J okay. Mr. J earns an employment income of 45,000. Sorry, 46,000. It's 46. Please make it 46.
Okay, ma'am.
He wants to make a pension contribution of 12,000 gross. I think it's blur. You can't read. So it's a gross word. 12,000
Okay.
gross. Please write down in your notebook. In occupational pension plan or in personal pension plan. So he wants to contribute 12,000 in occupational or personal. Anyone. And advise in which pension plan he should contribute. I mean, what will be the beneficial for him? Whether to contribute in occupational or personal, which pension plan is better to invest? How you will decide? In occupational is better or in personal pension plan, if you invest, then it's better for you. In which pension plan it is better for you to invest? Obviously, where tax liability will be reduced, that plan will be better for you, right? Occupational
Yes, ma'am.
pension plan have their own benefits when you invest in it. You can reduce your employment income, And when you invest in
Yes, ma'am.
personal pension plan, the personal pension plan has their own benefits. Which benefits? 20% if HMRC is contributing on your behalf. You can your basic and higher band both will be increased by the gross amount of personal pension contribution, and your adjusted net income will be reduced. So these things we will apply on in question, and we will compare the tax liability. Where tax liability is reduced, then that plan is better to invest. Got my point?
Yes, ma'am.
So in both cases, we will calculate the income tax liability. So first option, question number 2, first option, if you invest in OPP plan, then what will be your income tax liability? So firstly, we will calculate the employment income. So what is your salary in the question? Your employment income salary? 46,000
46.
less employee contribution in OPP 12,000. So what is your employment income? 34. 34,000. And employment income will go to non-saving column. Employment income 34,000 less personal allowance 12,500. And then what is your taxable income?
21,500.
How much?
21,500. 21500.
Okay. 21500.
Yes.
Okay. So on 21500 apply 20% tax basic band rate. Income tax liability.
4,300.
So when you invest in OPP, then how much income tax you have to pay? 4,300.
4,300.
Now go to the second option. If you invest in personal pension, if you make a personal pension contribution in personal pension plan, so if PPC you make personal pension contribution, how much? 12,000. Gross figure I told you in the exam. If examiner was silent, he will never use the word gross. Then you have to make it gross by 100 over 80. But now I am telling you it's a gross, already gross figure, okay?
Yes, ma'am.
So what is your non-saving income in the question now? Salary, 46,000. Less personal allowance. You can check through working one. Your working one, your A and I, you can calculate and then decide how much personal allowance you can get. So in the question, what is net income before personal allowance? 46,000.
46,000.
Less gross PPC, 12,000. So what is A and I?
34,000.
And you know, it's below 1 lakh. So how much personal allowance you will get? Full 12,500.
4,500.
And if you will not check through this way, you can see only your net income. If net income is below 1 lakh, there is no need to check A and I further. It's below 1 lakh. Full personal allowance you will get. Done?
Yes, ma'am.
Obviously, net income is below 1 lakh, then how your A and I will be more 1 lakh? It can be below 1 lakh. And taxable income,
33,500.
Next step, when you make gross personal pension contribution, your A and I is reduced by the gross amount of PPC, just like working one we have done. Now next step, apply the rates. But before applying the rates, obviously your basic and higher both bands will be increased by the gross amount of PPC. So basic band is up to 37,500, add 12,000, increase your basic band by 12,000 gross figure. So what is your basic band now?
49,500.
Similarly, higher band up to 150 plus 12. But there is no need to increase higher band in this question because your taxable income is below basic band, right?
Yes, ma'am.
Your taxable income is 33,500, all covered in this 49,500 basic band. So apply 20% rate. What is income tax liability?
6,700.
And now last thing, I told you that in gross amount of PPC, in this 12,000 gross amount, 80% is contributed by you, mean 9,600, and 20% is contributed by HMRC, mean 2,400. So this 2,400 which HMRC is contributing for you is a relief for you. And you know, relief will reduce the income tax liability. Obviously, relief will reduce your tax. So from your income tax liability, deduct HMRC contribution. 2,400. So what is the remaining income tax liability?
4,300.
Now tell me, in which option your tax is reduced?
Either of the two you can choose. They have the same income tax liability.
Same income tax liability. It means when you invest in OPP or PPC, your income tax liability always be same. Always be same, okay? It means there is no comparison between both because both are same. Both have same benefits. So either you will invest in OPP or PPC, there are same benefits. There is no comparison. Both have same benefits. In both cases, always income tax liability will be same. So there is no comparison between both. But in your exam scenario, we will discuss tax reducer topic in employment income chapter. Tax reducers, SEI, there are schemes, SEIS, EIS, VCT. When these, in these schemes, you individual will invest and you will get tax reducer, mean your income tax liability will be, your tax will be reduced. So when you invest in these three plans, you will get the tax benefits. So in your exam scenario, examiner will compare these three plans with pension. Okay.
Yes, ma'am.
Either SEIS with pension, either EIS or VCT with pension, any. So remember, when examiner will ask you a question whether out of these three plans anyone is better to invest or pension is better to invest, always remember pension will always be a better option to invest as compared to these. Always pension will be better to invest. So in the exam scenario, your answer will be always pension will be better to invest. Okay.
Yes, ma'am.
So when you compare, for example, VCT with pension, so which is better to invest? Always pension.
Thank
You must say in the exam, pension is better option to invest. And we will prove through the question. We will calculate the income tax liability with both options. And then always you will see in pension option, your income tax liability will be reduced as compared to these three. Okay. I will discuss in future.
Yes.
Right now, just remember, pension will always be a better option as compared to these three schemes. That's it. And when you compare OPP and PPC, both are same. There is no comparison. Both have same benefits. Understand?